Hello, we are Group 14. We are responsible for the topic 4. This is our table of content. In this topic, we will choose Vietnam as our target place. In recent years, Vietnam has become a place to transfer real estate investment from mainland China. This is because the Chinese real estate market has begun to encounter a bottleneck period. Investors start to develop different types of real estate, such as residential, commercial, and industrial. Although the real estate industry has many strengths and opportunities, it also has some weaknesses and trends. They will divide into internal and external factors. Next, we will use SWOT analysis on investing real estate industry in Vietnam. Okay, let me pass the mic to my groupmate. Thank you.
First of all, let me talk about the strength in demographic factors. Real estate price and demand are influenced by demographic data. For several decades, the real estate market can be significantly impacted by a change in country's demography. Vietnam is a country with a population of approximately 100 million people with an average age of 32.5. For a highly populated country, the shape of Vietnam's population pyramids has recently somewhat changed to have a narrower bottom and growth in the center, with approximately 60% of the population between the age of 50 to 64, which indicate the size of labor force in the country. With 60% of population of working age, which is between the 50 to 64, Vietnam is potential to enjoy the demographic dividend until 2014, according to UNFPA in 2022. It means the people of working age makes up a larger share of the population than those of non-working age. Vietnam's economic growth rate will be beneficial by the demographic dividend. The large amount of young neighbors will expand the demand for the retail flat, office space, and rental property. Meanwhile, the price of the real estate property will be increased accordingly. This is an ideal investment option for the investor. Next, I would like to talk about the labor cost in Vietnam. The construction cost of the real estate property will be highly affected by the labor cost. A low labor cost will be an incentive for attracting the investor to support their business expansion. According to the Vietnam briefing in 2022, the regional minimum wage in Vietnam will rise from 140 to 2002 US dollar. For comparison, the labor costs across Asia, including some parts of Western China with a less developed economy, typically start around 300 and 350 US dollar. As a result, Vietnam's young labor force actually comes at a relatively low cost, which could be a strength for Vietnam. Let's pass the time to the next group.
Another strength of Vietnam's real estate is the rapidly developing infrastructure. Although the infrastructure's development in Vietnam may be a little bit behind other Southeast Asia countries now, the government is putting a lot of effort and resources into them. According to Vietnam briefing in 2022, Vietnam's government spent 6% of the GDP on different infrastructure in the country. Infrastructures are very important to the real estate market, first affecting investment decisions. Specifically, industrial properties rely on transportation infrastructure as they influence logistics and exportation. As there are different infrastructure projects conducting in Vietnam, including transportation infrastructure, telecommunication infrastructure, manufacturing infrastructure, etc. It can be foreseen that when the planned infrastructure projects are complete, the infrastructure networks would be well developed. As a result, the real estate value there will increase eventually, as people can enjoy the high accessibility. Therefore, Vietnam's real estate has a high investment potential, favored by the rapidly developing infrastructure. Also, the low industrial land price and rent in Vietnam is another strength. In Vietnam, the price and rent of industrial land are not high, which favors investment in real estate. Land cost is critical when investing in the real estate market, as it affects the profit and potential of the investment. According to Census in 2021, the rental price of industrial land in Vietnam is lower than that of other countries in Southeast Asia by 25 to 30%. and the land price is expected to grow in recent years. Because of it, the potential for investing in industrial real estate in Vietnam is very high. As the land cost is low, investors can invest the industrial properties at a relatively low cost. Then, the price and rents of the industrial properties are expected to grow as the demand for them is increasing. As a result, investors can gain more profits. Now, let me pass the time to my groupmate to talk about the weakness of investing real estate in Vietnam.
Hi, I'm Yip Sin Yu, and I'm going to introduce the weakness part. Weakness is the internal characteristics of Vietnam that gives the disadvantages relative to other countries. The first weakness is the limited land supply. According to CBRE Vietnam, there is hardly any new land supply available in the Vietnamese markets to draw in the international investor in short term. And for the industrial sector, industrial land is scarce in places with adequate infrastructure near important ports and major urban centers. Industrial parks in important industrial districts are now over 90% occupied, and this results from the sluggish development of new industrial parks and the proposal of building on critical infrastructure projects. And this is a compound annual growth rate in the South area, and it shows that the industrial land supply growth has slowed dramatically. And the next weakness is the limited infrastructure supports. In Vietnam, the road system plays a significant role in the flow of the goods. Although Vietnam's air flights and ocean flights volume has increased significantly, but the bulk of the cargo from the Vietnam is still shipped by land. Furthermore, more goods flow through the ports than anticipated, and despite the improvements in cargo processing capacity and transportation, under the pressure from the relocating industrial operation, congestion still poses a significant obstacle to Vietnam's infrastructure. And on the corporate side, it will be difficult to lower the shipping costs. Even though the Ho Chi Minh City has 92 canals, many enterprises cannot utilize the waterway to ship their commodities. And also, financial inland rivers is over 100 kilometers, while the local inland has over the 600 kilometers, and both routes covers a long distance, which first higher the transportation costs, and then it will make the Vietnam's investment costs less competitive when compared to the other competitors. So let's pass the time to my group mates.
There is another weakness about weak housing affordability of low-income citizens. When great housing demands attract and boost the residential property market from foreign investors, 75% of semi-permanent and temporary housing still existing in Ho Chi Minh City. Some even are illegal and informal housing located in the peripheral area. You can refer to this picture. An imbalanced housing market occurs since foreign investors are over-focused on high-end housing investment, which the local working classes cannot afford it. There are only a few low-cost housing projects in Hanoi, located in remote areas with insufficient infrastructure. Even Ho Chi Minh City have no new affordable project was shown this year. Another witness is about the bank financing issue. Recently, the industry's proportion of capital sourcing by bank loans and bonds are decreasing, but it has still recorded an increasing of EBITDA ratio and outstanding credit for the real estate sector. There are also concerned credit quality and bad debt risk in Vietnam real estate market since most corporate real estate bonds will mature next year, and the repayment of house loans owner after 2-year grace period. If the economy keeps recovering slowly and inflation accelerates, the risk of bad debt may gradually appear. Therefore, recently, the government treats real estate as a risky sector and start tightening bans for lending to the real estate sector by credit restrictions. Difficulties of capital sourcing in real estate may have resulted. Now I will pass the time to my group mate to talk about the opportunities.
Okay, let me talk about opportunity. The first opportunity is China and United States trade war. The Sino-US dispute has caused supply chain to migrate away from China, and when the epidemic halted production of operation in China, all countries feel the risk that USD and the supply key will be concentrated in China. Some countries even encourage companies to relocate out of China with government funding. Then the term China plus one happened. It means that companies in various countries are not moving their business or production base out of China, but setting up another country to diversify risk. For investors, Vietnam can also serve as an alternative to China. Vietnam is benefiting from the China plus one strategy, in which Chinese-based investors move and expand to another country to increase market access, diversify risk, and reduce labor costs. The growing trade war will only accelerate investment transfer, especially in labor-intensive consumer goods industries such as clothing, footwear, and electronics. Most important is Donald Trump raised the average US tariff on Chinese import to 21.4%. Heavy tariffs are forcing producers to seek a preferred destination for supply chain diversification. Investors choose Vietnam from this opportunity because of its strengths. The emergence of a Sino-US trade war is an opportunity for Vietnam, and with its own advantage, it has become a major incentive for investors to transfer real estate development, including residential, commercial, and industrial, to Vietnam. Thank you.
Thank you. Then I'm going to talk about the second opportunity. Another opportunity is new trade agreement. Since the industrial operation from China relocated to Southeast Asian country, around $21.6 billion of the investment capital injected into Vietnam. This makes Vietnam to be more powerful in increasing its economic and financial security. The optimistic economic environment triggered Vietnam sign the different free trade agreements. In the following, I'm going to cover two free trade agreements that significantly affect the real estate industry in Vietnam, including the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and EU-Vietnam Free Trade Agreement, EVFTA. Under CPTPP, the trade rated tariff reduced from 1.7% to 0.2% for Vietnamese exporters. This enabled industries like textile, footwear, electronics, etc. have an opportunity to increase their export to the member countries. Due to the increase of exportation, industry and factory will further expand in Vietnam. Hence, domestic foreign investors could invest in the sourcing industry and ready-built factory to get benefits from the free trade agreement. For EVFTA is an agreement signed between EU and Vietnam, which provides almost 99% of the elimination of custom duty between the member countries. Export industries such as textile, electronic, and smartphone production are benefited from this agreement. The figure on the left shows that the export and export turnover between Vietnam and EU remains steady increased after signing the agreement. This reveals that industrial and commercial activity expanded under the agreement and potential for development, which encouraged investment on industrial and commercial real estate. Then pass the time to my good mate. Thank you.
I'm Cheung Chi. I'm going to talk about the field analysis on investing in the real estate industry in Vietnam. One of the important fields is insignificant policy support. Although the Vietnamese government passed the law on residential housing in 2015, allow foreign investors to invest an unlimited number of real estate units, but they can only have a limited term, not a permanent real estate ownership. The duration of the ownership is usually only 50 years, and they can only make limited lease and capital contribution. In addition to the real estate ownership, land use rights are also very restrictive for foreign investors. They can only lease the land for 50 to 70 years, but cannot buy any land in Vietnam. Compared with other Southeast Asian countries, foreign investors can legally have permanent land use rights in Singapore. They can develop the land with loose restriction. It can be seen that the Vietnamese policy does not provide significant protection for investing in the real estate industry, posing a threat to foreign investors. Another important threat is Vietnam real estate still under development. Real estate in Vietnam has developed rapidly in recent years, but the real estate developers are still in their infancy. The size of the developer is therefore a significant threat to foreign investors. Unfinished buildings are often found in Vietnam. For example, Saigon One Tower and Saigon Penning Exhibition Center, they started construction in 2007 and 2015. but still unfinished in this year. The Saigon One Tower was always believed that it would become the second tallest building in Ho Chi Minh City. The reason for so many unfinished buildings in Vietnam is that the developers are very small. They often run out of funds and collapse during the construction process, leaving foreign investors with more loss than gains. When the construction project cannot be completed, neither the Vietnam's policy nor the developers can protect the interests of investors. It can be seen that the size of developer pose a great threat to investors. So I will pass the mic to my good mate. Thank you.
Another threat is being sensitive to the global economic environment with excessive dependence on export. Under the trend of factory relocation, export has become the main pillar of Vietnam's economy. While the total export value was over 300 billion US, accounting for a large portion of its GDP, major exporting countries like the United States and China constitute over half of its total export value. All this reveal that export has played a pivotal role in the economy of Vietnam. Any global economic crisis could create severe impacts on the interdependent local economy and real estate industry. For example, during the pandemic, in which the anti-pandemic policies and lockdown of cities have led to economic downturns of Vietnam's major trading partners, Vietnamese export value declined significantly with an average drop of 7% and 25% respectively. Suffering from the pressures of order decline and export difficulty, the deteriorated local economy and business uncertainty in Vietnam have created great pressure on the property market. Reduced affordability of residential units and lessened investment in commercial and industrial properties have led to a fall in property prices and a rise in the vacancy rates. To summarize, Vietnam is highly sensitive to the global business environment owing to its heavy reliance on export. A global financial crisis or economic instability could severely impact Vietnam's economy and real estate market. The risk of real estate investment varies significantly with the global economic environment.
Now I will make some recommendations based on the current situation. First, we suggest focusing on the capital source and subsidies in affordable housing. Under the uncertainty of global economy and real estate transaction after lockdowns, the limited supply of affordable housing due to lack of land and investment are always designed for solution. Meanwhile, titling of real estate loans also threatens the working classes to own a property in urban areas. The government and local investors could change the strategy on the investment and funding support of affordable housing by its huge and stable demand. For the land shortage issue, developing suburban districts such as Dong An and Hoi Du for affordable and social housing is also a possible direction. This could be planned with a good matching of infrastructure and facilities to attract commercial and industrial investment for local work opportunities. This could tackle the imbalanced housing demand in major cities and develop a stable housing market. Now I will pass the time to my groupmate to talk about another recommendation.
Another recommendation is anti-corruption. Favored by the international trend of industrial relocation, Vietnam may be the next real factory due to its strengths and opportunities. However, the government should put a lot of focus on anti-corruption in order to keep its strengths. Specifically, the infrastructure are still developing, and corruption of the local government may lead to failure of the projects, or the quality of the infrastructure may not up to standard. If this is the case, Vietnam would lose its strengths and the investment would not be that beneficial. Now, I would like my groupmate to make a conclusion of our work.
To conclude, the interdependency between Vietnam's local economy and the world's economy has been greatly strengthened. The continuous growing scale of mutual trade and inflow of international capital have provided huge development potential for Vietnam's economy and the corresponding real estate market. It is observed that the Vietnamese government has been seizing the opportunity to develop its economy by initiating relevant supportive policies and administrative convenience for both local and foreign investment. Yet, several deficiencies remain scope for refinement. The SWOT analysis of this report has already provided several insights for further prosperity of Vietnam's economy and real estate market. That's all for our presentation. Thank you.